Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick and Scarlet Fu counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with our two favorite people, Carol Massar and Madison Mills. Madison filling in for Tim Stenovic. Welcome to our audiences across Bloomberg Television, Radio, and Originals, as well as those folks streaming on YouTube. Carol, stocks off the lows of the day. We should point out the price action today, probably not really representative, I think, of longer-term trends here. But we talk about sort of what this market is waiting for. What's going to be the next catalyst?
Right, exactly. I don't know. Is it earnings? Is it the Fed meeting? Yes, yes, and yes. Is it Jay Powell next week? You know, Abigail Doolittle kicking off our broadcast earlier, talking about how much volume is down, I think more than 20% versus the average, and then how we've seen down volume as the markets, the equity markets have retreated overall this past month.
Yeah, and we also just had a guest on our show saying that we haven't seen a VIX over 40 in this cycle, and she said that this is telling us the market may be accepting the Fed and looking ahead to another round of volatility in earnings as we kind of wrap up this week, Scar.
Yeah, but it's been interesting to see that the VIX has been fairly muted, indicating that as much confusion as there is over the economic outlook, investors aren't ready to run for the exits.
Yeah, well, a lot of people are already at the exits. I mean, you do wonder sort of the competition, though, between, you know, yields and the idea that sort of what are you getting in the equity market and whether it's even worth that risk, right? I mean, how many people have we talked to who said, yeah, look, if I can get 5-6% on short-term, whether treasuries or even corporate debt, you know, why would you sort of go on the limb to buy, you know, a growth stock that maybe could actually just sort of take a nosedive?
But the problem with treasuries is that you then, within 3 months, you're faced with the same question again. What do you do? Yeah, a lot of reinvestment risk, of course, to that strategy here. But, of course, there's still a lot that needs to be sorted out. Getting the closing bells here in New York, a Dow Jones Industrial Average higher on the day. All of the major indices higher, up about 0.2%. The S&P up about 0.3%. The NASDAQ composite up about 0.6%, while the Russell 2000 up about 0.3%. Dow Transports, that's your relative outperformer here on the day, Carol. We're talking about a big move, actually, about 1.3% here on the day, as we still see a lot of people making a bet on railroads, making a bet on airlines, and making a bet on car companies.
I always love transports in terms of what it could tell us about what's going on in the economy and the outlook. So really important indication. Having said that, you know, people kind of okay, meh, I think is how Maddie described it earlier. 261 names, Scarlett, in the S&P, actually posting some gains, and 240 lower to the downside today. And we do have a headline crossing the Bloomberg terminal, and dun-da-da-da, Elon Musk retaking the spot as the world's richest person. This is coming in a week when on Wednesday we're going to have that investor day. We're going to hear about maybe succession. On Friday we had Ross Gerber, right, and a Tesla investor, Tesla advocate, owns Teslas, backing off, you know, wanting to take a board seat. So this is interesting, and just some perspective, kind of, Scarlett, if you will, one way of measuring kind of who's who in our business world.
Yeah, absolutely. We know the billionaires themselves like to hold themselves to that metric, and they measure their wealth according to where they stand and how they rank against others. And of course, Tesla is one big reason why the auto and components index is off to a 4.5% gain today. That's the biggest performer here in the S&P 500 when you measure it by 24 industry groups. Romaine, you mentioned transportation index up about 2.5% as well. Chip makers also doing fairly well today. On the downside, utilities have been laggards, as has been the pharma names. The Mercks and the Eli Lillys have been drags on trading today.
All right, so let's get to it, folks. Scarlett breaking down the various categories in the market today, the winners and losers. I'm going to get to some of the specific names. Union Pacific, we've talked about this a lot today. This was top in the S&P 500, up about 9.3% in the trade today. Coming up after it said it would replace its CEO, Lance Fritz, this year amid pressure from a major shareholder. So you had that coming out. A new CEO would be tasked with improving operations and also boosting shareholder returns, as Romaine was talking about transports and railroads, as the railroad also grapples with restless customers, and we know those labor relations, which have been certainly a lot of volatility there. So that name's certainly a standout. Take a look at Seagen, top in the NASDAQ 100, up 10.4%. You know this story, Wall Street Journal reporting earlier, Pfizer in early stage talks to buy the cancer therapy developer, said Seagen would be expected to command a premium above a $30 billion market value. So that's out there. And then Tesla, we just talked about Elon Musk retaking the spot spun as the world's richest person. Well, here's a good reason why. Tesla, it's top in the S&P 500 and NASDAQ 100. This company has been on a tear in terms of the share price. Stock is up about 66% year to date, up approximately 90% from the low on January 3rd of this year. And of course, big news this week, Maddie, will be, of course, that March 1st investor event. So we'll be watching to see what he has to say and what the company has coming forward.
Yeah, definitely looking forward to that. But it's M&A Monday on our decliners today. We're going to start with Tegna, down on news, of course, that its deal with Standard General may be dead on FCC opposition. That stock dropping by as much as a little close to 19% on the close on that news. The regulators calling for a hearing, pushing back the timeline on that decision, and Standard General did ask the FCC to change course on that decision. But moving into some healthcare stocks, Scar mentioned the healthcare index dragging down the S&P today. I want to talk about Pfizer, as Carol mentioned, in talks to buy Seagen, which is pushing up Seagen stock, but Pfizer down on the day by just a little over 2% there. With COVID on the decline, Pfizer, of course, is looking for some diversification and for somewhere to put all of that cash that they've brought in over the past couple of years during COVID. But the wild card is whether Merck or anybody else is going to step back in and create a little bit of a bidding war there. Merck is down 0.5% as well.
Pfizer needs to look a little bit closer, though, right, at the stock. I mean, we're talking about, stock hitting a fresh 52-week low today. Even if it weren't for the downdraft today because of this rumored merger here, I think there's still a lot of concern here. I mean, what's the upside that we're looking at, Maddie?
Yeah, I mean, I think for Pfizer, it's really looking into, again, something to do with that cash to continue to grow the company because of all the cash that they've brought in from COVID vaccines, which is, of course, the main profit driver for Pfizer. But what are they going to do as the pandemic starts to wane? And that changes the equation for them a little bit.
Yeah, absolutely there. All right, let's take a quick check here what's going on in the yield space. And frankly, not a whole lot was going on today. Of course, we had that big sell-off in treasuries last week, and really the couple weeks before that, a little bit of a pause here on the day. You're down basically about 3 basis points on the 2-year yield, and basically on change on the longer end of the curve at the 20 and 30-year. Your 10-year yield, though, still camped out at 3.9. Of course, we could see a big reacceleration in any of those yields at any point in time, depending on, I guess, what happens here in the week ahead. We talk about the fact that there really isn't a whole lot of catalyst when it comes to central banks and of themselves, but of course we are still getting some earnings, Carol. I know we're going to get Target tomorrow morning and quite a few other companies as well. Zoom actually crossing the wire as well. Remember when we all used to
Speak and you shall receive.
It's moving around in the aftermarket too.
Yeah, 4Q numbers coming in, adjusted EPS, a big beat here, $1.22. The street on average was looking for 80 cents a share. Revenue coming in at $1.12 billion. The street was looking for 1.1. Here's your guidance going forward. Full year 2024, adjusted EPS $4.11 to $4.18 a share. That's above the street estimate on average of $3.53. And for the first quarter and for the full year revenue, 2024 revenue of $4.44 billion to $4.46 billion. That's slightly above, at the top end of the range, slightly above the average of 4.6 that the street was looking for.
Yeah, I'm curious, when you talk about Zoom, really they're banking on the enterprise customer and signing up more enterprise customers. Where's the growth going to come from at a point when everyone's going back into the office? Yes, people still work from home on Fridays, and so they'll
and Mondays.
So they'll keep their accounts intact, but they're looking for growth, right? And it's not as if individuals are signing up for the premium accounts on Zoom.
It's all about enterprise customers. You were absolutely right. I mean, I'm looking at their press release, and they talk about fiscal year 2023. They talk about our growing base of enterprise customers, increasingly looking to Zoom to provide, a seamless communication, blah, blah, blah. They did say evident in the 27% growth in customers contributing more than $100,000 in trailing 12 months revenue. So, yeah, it's ultimately, do people stick to it, Maddie?
Yeah, but looking at those
I'm still
earnings,
using Zoom at work.
I'm still using it, but this is one of my favorite quotes on this from Citigroup's analyst Tyler Radke. He said, "Our primary concern is Zoom's online business, which has some of the highest churn rates in software, about 40% annualized." I think we all know somebody who's signed up for a free trial run of Zoom. They hold on to that 30-minute or less access, and they don't actually pay for the subscription, which is critical to the business.
There's also the competition aspect as well. Remember when this whole pandemic started, Zoom was kind of the only game in town. I mean, you had some competition, obviously, from Microsoft and a few others, but a lot of companies have really sort of beefed up their video offerings as well. And, Zoom's not the only game in town for
Cisco
corporate clients.
WebEx, right? Microsoft Teams, Google Meets.
Is WebEx still around?
I know. It was for a while.
Okay.
Hey, but shares of Zoom up 3.5%. I think the stock's up about almost 9% so far this year. So investors at least liking what they have. I also think, guys, this is part of that pandemic readjustment, right? We knew everybody was all in during the pandemic. Then you came after it as people started to go back to work, and there was that pullback. And now we're finding, okay, kind of what is the net neutral, right type of business for Zoom going forward?
Yeah, and I'm going to be looking at Workday as well. We're expecting earnings from them today up about 9% year to date, but also facing some lawsuits at the same time. So I'm really interested to see how the market responds to Workday.
Well, those earnings actually did cross a little while ago. Shares relatively unchanged here. Adjusted EPS did beat, as did the revenue. Probably the big news, though, is that naming a new co-president and vice chair of the company. So something to keep an eye on.
Yeah, it's keeping us all busy. A lot of stuff coming at us on this Monday. I'm just not quite ready for it. So thank God it's almost Tuesday. All right, guys, that's a wrap. Our cross-platform coverage.
How many days a week are you working?
I don't know. I mean,
Carol only works Mondays and Fridays. She takes Tuesday, Wednesday.
Anybody hear anything? I just hear static. All right, that's a wrap. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. We will see you again beyond the bell, 4 p.m. Wall Street time, same time, same place tomorrow.